Hello, this is Paul Harris of Kitco News at the BMO Global Metals and Mining Conference. I'm joined this morning by Nolan Watson, President and CEO of Sandstorm Gold. Morning, Nolan.
Morning.
Welcome to the show.
Thank you.
Let's start with the gold price. Gold's had a big move upwards today. The Dow's had a big move down. Where are we, do you think, in the gold cycle, and where do you think we're going to go from here? How sustainable is this move?
Well, I think there's a couple things going on. One that I've been talking about for a while now, which is that the world has so much debt that there's just about anything that can tip the economy over, and governments are going to have to start quantitative easing again. And we saw that late last year, where governments really did start printing money and repo issues in the US, and gold has had a lot of wind at its back. I think all of those fundamental factors are as prevalent or even more prevalent today to continue to fundamentally move gold higher. And then the second thing that's happening is obviously the coronavirus, and it's scaring people a lot, but it's really speaking to that first issue, which is there is so much debt in the world. It doesn't take much economically to tip things over and have companies go bankrupt, and you're seeing that. I think China just came out with 1 million companies that now are effectively functionally insolvent and asking for bailouts from the Chinese government. And so it really is starting to affect the fundamental economy, especially over in Asia. I think you're going to see it in Korea. It looks like it's hit Italy, and it's continuing to grow. So we'll see if this is something that will continue to push gold higher. And even if it's not, even if it's sort of a blip and it goes away, all the fundamental factors that have been pushing gold higher, I think will continue to do so.
Okay, I think one of the things, or one of the reasons why royalty companies have done so well is because there's a certain level of insulation, if you like, against the ups and downs of the normal daily business cycle of any particular mining company. How do you see that sector has evolved, and what's next for the royalty companies?
Yeah, right now is actually a really good time for the royalty companies, because you're right, we all generate a lot of free cash flow, so we can kind of do whatever we want with it. And the question is, what is the deal atmosphere like? With gold prices going higher, gold companies don't need as much streaming or royalty capital from the streaming royalty companies. But what you're seeing, especially with this coronavirus and or just some of the other fundamental economic things, base metal companies are having a very hard time. Cost of production is going up, base metal prices are coming down, balance sheets are getting squeezed, and so we're seeing a lot of deal flow from base metal companies who have gold and silver byproduct. And so I think there's a lot of product that will be coming out for the royalty and streaming companies to buy over the next year, 2 years probably. So it's a good time to be a streaming and royalty company. From a bigger perspective, there's a lot of streaming and royalty companies now. Everyone in the world's trying to start one up. We've seen that for about 6 or 7 years now, where it's kind of been the cool thing to do, is start up a royalty company. The vast majority of the management teams that have attempted to do it have failed, and there have been a few good management teams that have been successful, and so we'll see. I have a feeling there will be some consolidation in our industry over the next 2 years. I would be very surprised if we didn't see any. I think that fundamentally it makes sense, and if you don't see any consolidation, it's a failure of the CEOs in our industry to manage the social issues around M&A, but we'll see.
Well, I guess you touched on a couple of points there. One, I guess, in terms of the base metal producers, at a conference like this, BMO, I imagine you've got a shopping list to develop your business further. And in terms of how would you phrase it? People jumping on the royalty bandwagon, thinking anybody can do it? Because there's been, well, just in the last month, there's been at least 2 new ones. One was announced this morning, the creation of a new royalty company. Yeah,
I've seen that. I've been in the royalty and business space for 15 years now. In fact, I'm the longest standing CEO of any royalty or streaming company in the world now, believe it or not. And so I've seen management teams come and management teams go, and I have a lot of people that even approach Sandstorm saying, I want to start a streaming royalty company, will you seed me? And a lot of the management teams just don't have any substance. I think the one that you saw launched this morning, a company called Nomad, they do have a legitimate management team. I think they'll do just fine, and that's great. It's good to have good people running companies in the industry.
In terms of you see that there's going to be future consolidation in the royalty space. It's unsustainable to have such a number of players?
I think it's sustainable based on the amount of product that I can see behind the scenes that's going to be sold to streaming and royalty companies over the next couple of years. Whether it's sustainable long term, I don't know, but there definitely is room for consolidation. I don't think it's an absolute necessity, but I do think it makes sense.
When we've had you on the Kitco News show in the past, you've been quite critical, openly critical of management teams of miners. I think that was 3 or 4 years ago. Have things improved in the last 3 or 4 years?
I would say there has been a slight improvement, but on average, the fundamental decision-making of leaders in our industry I don't think has been good. With gold prices high, you don't see the mistakes. The mistakes don't hit home as painfully as they do in a bear market. I think you are probably going to see some mistakes be made by over-aggressive CEOs now that commodity prices are high, and they'll come back to bite them if commodity prices ever reverse, but that's a ways off, and we'll see how it goes.
Some of the guests we've had on today talked about how the gold producers are maturing and becoming, should we say, more professional companies, more investable companies, like companies in other sectors. And as part of that, as more generalist investors come in, they seem to be much more sort of critical when companies miss their goals, miss their targets. And we saw that with Agnico Eagle. They got hammered with a relatively small miss. I mean, I imagine that's a good thing, because holding management to a higher level of discipline or performance.
Yeah, well, I think there's two separate things happening there. So the first is you are seeing gold mining companies start to run themselves like real businesses, but there are fundamental underlying reasons as to why. One of which is that there's so much capital that's moved from actively managed institutional investors to passive ETFs and other forms of passive capital. But there's also been a change in how liquidity requirements have been put on fund managers. So you're not allowed to hold a position in a company unless you can trade out of it with 10 days for a lot of these funds now, which means for small companies that are fairly illiquid, they're just not investable by institutional investors. They can't hold illiquid positions. So it's forcing the companies in the industry to merge. You're seeing a lot of merger of equals happen, and to get bigger. And as companies merge and get bigger and bigger and have more substance, they get more governance and better boards of directors and better CEOs. And I think you're starting to see the companies grow up because the capital markets are forcing them to get bigger and act like real companies. And so I think that's fundamentally the main factor you're seeing. In terms of management being held to account for share prices going up and down if they miss or beat earnings, a lot of that is just quantitative trading. There's just a whole bunch of robots that can just tell if a company missed, and if they miss, they know the share price is going to go down, so they jump on the bandwagon and they drive the share price down even further, and the same on the way up. So you're seeing these overly exaggerated price movements as earnings are released, and that's computer driven, really.
The gold price, precious metals prices may be going up, but it doesn't seem to be getting any easier for junior explorers, junior miners to finance. No. Indeed, you could say there's a bifurcation. You know, those that have a big name behind them, the Pierre Lassondes or Ross Beatty can finance, and everybody else is suffering. Does that create more opportunities for a company like Sandstorm? Yeah,
it absolutely does. If I look back in the industry 10 years ago, there's some companies right now that could have pulled off a bought deal like that, and right now they can't raise very much capital at all. And so they'll come to a Sandstorm and say, we want to go build a mine, can you help us? And we've done that a few times here over the last little while, and we're getting fantastic deals and way higher internal rates of return than we used to. And so these shifts in the capital markets are providing opportunities for us to profit for our shareholders.
Excellent. Well, thank you very much for your time this morning, Nolan, and for sharing your thoughts with us. And thank you for watching, and stay tuned on kitco.com for more from the BMO Global Metals and Mining Conference.